broadcast is now starting. All attendees are in listen-only mode.
Good turnaround Tuesday, everybody. How are you, Face? I'm Dale. I'm your host. Could I get you a cocktail? Bloody Mary this time of day. Bloody Mary at 5 a.m. Everyone doing okay? All right, so the Fed meeting starts today. We'll know tomorrow. So I think turnaround Tuesday is going to be transported to turnaround Wednesday. So I'm looking at some candidates. Short term, well, let's look at the long term US dollar MEX. We could get to the 78.6 level here, up around 21. I know it's been a monster, but we're even starting to get some non-confirmations up here at new highs on the daily. Fairly glaring here. We'll see what it looks like if we get up to 21, but starting to look like maybe a 3 drive setting up there. And the dollar, I'm starting to think, I thought people might try and front run it. Everyone's looking for the end of QE by Draghi, that maybe they take it down. This was a nice rally to sell on the summit. It's my contention that 92.50 or so is a magnet down here. Shows up a little better here. On the daily, this was a line. What's a line? I called the CEO technician who I interviewed yesterday and asked him if I could keep my weekly breakout green line up on the Dixie, and he said it was okay. So we have an inside week after down week, 2 down weeks. I believe that before we go to new highs in the dollar, which I'm expecting, still think we see this level. So it's just a matter of, was that your last chance where you have to take the risk of the Fed and the ECB? And I say to myself, okay, I don't want to play roulette. It's a binary bet. It's betting black or red. I tweeted that was when I was at FX Street and we were covering the NFP, and someone in our trading room said they bought the euro right before the NFP, and it was a real weak number. So the euro popped, I don't know, about 100, 130 pips, and he came back to me and said he made 130 pips getting long before the NFP, and I said, good guess. Okay, so let's learn to react to the reactions, and there'll be quite a few in the next 3 days. The summit was kind of a blah, not much market reaction here. Still looks like they're going to try and hold the S&Ps together. A lot of non-confirmations happening here on different time frames. Okay, maybe it tries 2,800, but we're entering this midweek period, and really your demarcation line, if you still want to be long, is if we close back under this breakout 2740. That's going to be your first sign that something's happening. I don't know, is Greg here with us, guys, today? Is he dropping by? I know I tweeted something that from Greg's stream. He has a very bearish count he's looking for in SPX. So, I always feel more comfortable when I'm looking for peaks that Greg has a wave count that lines up with it. Is Steve Volge in the house? I'm wondering if Steve is, or he'll check in 25 minutes or so. Any questions for me? Warriors? Have you guys been getting a hold of Brent? Give me why if you've called Brent to check out being on the reimbursement program or searching for a better broker solution, Forest Park FX. How did you know I could do that? Oh, Purple Rain? Yeah, actually, that's what I did when I met my wife, Joe. So my marketing strategy for meeting women was being a singer at karaoke. It worked, man. Yeah, I could do that tune. Trent. Well, there's Justin and Trent. What did I say, Amanda? Steve's here? Oh, that's good. Steve's here. I said Brent. Okay. It rhymes anyway, okay? So everyone, let's all wish Steve Volge a happy birthday. What do you think? He deserves it. He deserves it, right? I mean, the hard work he's put in. Guy works, I don't know, about 35 hours a day to work with developers to give you guys the best website to trade FX from in the universe. So it's Steve Volge's birthday. Happy birthday to you. Happy birthday to you. Happy birthday, Steve Volge. Happy birthday to you. Are you a metrosexual? Just kidding. Happy birthday, buddy. To the most disciplined trader and hardest working guy in the business, Steve Volge. And Steve,
Thank you, Dave.
yeah, may this be your best year ever in all ways. Okay, buddy?
Okay, thank you very much.
Yeah,
Thank you, mate.
you hairy stud, you. All right, so anyway, everyone get a hold of Trent, okay? And,
So you can buy cheaply some Brent.
yeah, and tell him, don't tell him I called him Brent, or I'll have to tell you to get bent. Anyway, you did a few months ago. Anyone else? Was he helpful to you, Kareem? Very. Okay. Nice testimonial there. All right, so let's bring Blake in. I know he was up late watching. You know, Blake, they should have had that summit. They could have done it over Skype and saved taxpayers millions and millions of dollars. And I bet you anything, we paid for all the security and the trip for Kim.
Yeah, who knows? I have no idea.
I mean, they could, you know, they could have done it like we do our meetings, right, over Skype.
All I know is I'm going to pay for it over in about a couple hours from getting up at 12:30 a.m. So I got up at 3:30 a.m. Eastern time to witness nothing. Anyway, so happy birthday, Steve. I know it's Steve's birthday. Happy birthday.
Yeah.
Thank you, Blake.
Well deserved. You made it one more year. Congratulations.
Nobody expected that, but yes. As it seems
I had the under, so I lost.
No, he's got another 50, 60 years in him now.
Yeah, he's Greek. Those guys live till like they're 100. So
yeah, Uzo cleans out their blood vessels.
If the secret to long life is Uzo, something tells me I'm dying imminently.
All right, well, start drinking.
I was never a friend of alcohol.
Yeah, well, maybe you wouldn't be a technical analist if you had a drink once in a while.
Dale, you're on a roll. You're on a roll today, and I'm thinking we're gonna have to turn the show PG-18 or something.
Go ahead, mute me. So, all right. So, Blake, what do you think now? I mean, you know, the whole world's expecting Draghi to, you know, the euro to rally on the ECB. So are you too? And how do you play it? I mean, you just get long before the ECB?
Well, before the ECB, we got two other things that are important.
Yeah.
We have CPI data that's coming out of the U.S. here in about 20 minutes, and that's going to be important because it's going to help us gauge what to expect out of the Fed. You know, if the inflation numbers come in a little bit hotter, that would give the Fed a little bit more leeway to be more hawkish. And if the numbers miss today, that's going to be a little problematic for the Fed, especially trying to set expectations for a September hike as well. So, so before we deal with the euro, the euro dollar, we've got to deal with the inflation data, and then also the FOMC tomorrow. So those are going to be important events that are happening as of right now. Now regarding the euro dollar, and actually, let me take a step back as far as the North Korean summit with Donald Trump and Kim Jong-un. Yeah, so I had to say it that way. The fact of the matter is that the meeting went as I think the markets were pricing in. Obviously, it was going to go okay. They were going to meet, and they met. But it's to be seen what's going to happen with North Korea and with the U.S. administration too. I think Kim Jong-un wanted to get some of the what's the word now? I'm lost. Sanctions. Some of the sanctions lifted, exactly. Yeah. And I think he walked away not getting that. And so they went for the pictures, and so both leaders could go back to their respective countries and call it a win. But in all actuality, whether the North Korean leader sees this as a win, or he goes back, and doesn't live up to his end of the bargain, is to be seen.
What is his end of the bargain?
A denuclearization, right? So if it's going to be interesting to see what rhetoric happens from here on out. But the market, it was basically a non-event, which is for those of us that got up extremely early, that would be me. It was kind of a bummer as I got up and I was hoping things were going to be a little bit more exciting, but it wasn't.
That's a nice triangle you have up there in the euro, buddy.
Yeah, so the euro, this is kind of my focus right now. The euro dollar is sitting in a triangle at the moment. We're consolidating. We're just consolidating here ahead of two key events this week, minus the inflation data that's coming out here shortly, with the FOMC and the ECB happening over the next couple of days. Whether we see the euro continue higher through 118, I'm looking at 118.20. I mean, that's the level that really has captured my attention. We have to get through 118.20 in order for the euro to look a little bit more constructive. Or we get back below 117.40, which this is the neckline of the inverted head and shoulder pattern. If that happens, then it's the picture is going to look a little bit less bullish in the euro dollar. But the euro dollar is consolidating, and I think we've got to wait for a breakout here before we can get too excited one direction or the other regarding this particular pair. Now the pound also rejected some resistance. It's come down a little bit. There's a lot of votes happening in Parliament and debates over the next couple of days regarding Brexit. So chances are we're going to see a lot of volatility in the cable here in the next couple of days. And so while we're below 134.20, which is right here, while we're below this 134.20 level, you got to be a little skeptical about the pound. I bought some last night at 77. I'm still long. I was, it's down a little bit right now. It was up a little bit earlier. I bought some before I went to bed. The cable is just kind of sitting here. I'm trying to play it, you know, regarding the pattern and play, but I am a little nervous about being long while it's below 134.20. If we can get above 134.20, that, like I said, that'll shape up the picture a lot better regarding the cable. The Aussie and the Kiwi still really, there's nothing really to do here. Although the Aussie, I believe that we're still below this major broken trend line, and I believe while we're below the 77-cent level, you kind of got to look lower. But at the same time, I haven't been able to get a good price on it because I'd actually rather short it on a more significant rally towards, you know, 76.40, 76.50 before laying out a short. Now, we do have inflation data coming here in the next 15 minutes. So if the inflation data is a miss, and that allows for the dollar to pull back a little bit. And by the way, for CPI, we are looking for 0.2%, both core and headline number. So if that number, if one of those numbers come in a little weaker and the dollar does weaken a bit, and we see the Aussie maybe spike up to the 76, 30, 40, maybe 50 level, I would be looking for a short up there if given the opportunity. But I don't know if that opportunity is gonna arise. I don't know if we should necessarily expect a weaker inflation number today. So I'm just looking at the Aussie and just kind of waiting for this price here. If we can get a move up here, that's where I'd be more interested in shorting the Aussie. I just don't know if that's going to happen. The Kiwi, I'm not even touching it. The dollar Canadian is again inching up towards its 130.50 level. You know, now that Trump has gotten past the North Korean you know, hurdle, he may go back to the U.S. here and start focusing again on trade. And I think that the back and forth between Canada and the U.S. or Trudeau and Trump are really going to weigh on the Canadian currency unless we get some sort of you know, NAFTA deal inked. I think you got to be a little nervous about being short the dollar Canadian or long Canadian currency. I'm not trading the dollar Canadian as of yet, but you know, I do think above 130.50 is going to be a very bullish breakout. That is a multi-year breakout, trend line breakout. So, you know, 130.50 is key as far as I'm concerned. We're only 40 pips away from there, and it looks like we're going to eventually break it. You know, maybe if the inflation data is a little stronger, maybe that's what tips the scales and drives the dollar Canadian higher. I'm not too sure, but I like I said, I'd be a little nervous about being short the dollar Canadian or long Canadian currency at this point. And if you look at the peso, you pointed out, Dale, and I actually tried to short it yesterday. I shorted it at 120.40 or 120.38. And I had a really tight stop. I shorted, maybe it was like 120.50. I think I shorted it here. You know, I think I shorted it here, and I put in my stop right here. I just said, you know, if it's gonna fail, it's gonna fail right there, and it actually pushed through my stop, and I'm like, okay, that's, you know, I'm not playing that anymore. But you look at the dollar peso at this point, and it actually, you know, looks.
Oh, you do have something at 21.2, and that's a lot of confluence. You have that. What is it, a Gartley, or what kind of harmonic?
That would be that would be a Gartley pattern.
Okay.
So I was thinking it was going to stop at the 618, 127% extension right here. It might actually head up towards the 78% retracement or 161% extension right here. So that looks like more doable now, and it's a tighter confluence. You know, around multiple. 20, multiple levels of confluence here. So that looks very possible. But I don't know if I mean, I might short it just try to trade it, but it is still counter trend. And with the Mexican elections and the NAFTA negotiations not going great, you know, you got to be targeted whenever you trade counter trend. Like if I trade the here, I'll take this here. You know what? I'm gonna remove that. Let me draw really quick. You know, if you trade the US dollar Mexican peso, I think you've got to be targeted in your entries and be willing to take a quick loss. And that's exactly what I'm gonna have to approach that if trading that tomorrow. So, or tomorrow, I say tomorrow, if we get there, is what I meant to say. And what else? Oh, the dollar yen. The dollar yen's firmed up a little bit here. We are above the 200-day moving average. We broke above the 200-day moving average yesterday in Asia ahead of the summit. We pulled back, but we're still holding above 110. So I think while we're still trading above 110, you got to be a little careful with the US dollar Japanese yen. I had a short in the dollar yen. I did get stopped out yesterday. And I had a pattern in play that actually got closed out as well. You know, I was willing to try to take it counter trend when it was around the 618 retracement, which is this longer term 618 retracement here. But you know, we did fail last week. Could have taken some profits, but you know, with it breaking above that 618, which is located right here, you can see it right there. When it was above that 618, and we started to break new highs. You know, you had to again, whenever you're going counter trend, you have to just keep your stops relatively tight and be careful with it. So the dollar yen, it does look strong right now, but I think a lot of this will be more having to do with what happens with risk appetite from here. Let's see how stocks respond. Let's see. You know, bonds are actually weak. Yields are up right now, and that's aiding the recovery in the dollar yen currently. So that's what we've got going on at this moment with the dollar yen. And you know, if you look at the other yen pairs too, like, you know, the euro yen looks pretty firm here. We're also hitting the 618 retracement. We're above a downtrend line, so the euro yen, you know, looks constructive. Pound yen, you know, just kind of challenging the underside of this trend line. You know, the yen pairs are just kind of being pulled in both directions at this point. But I think a lot of this we're gonna be guided by the inflation data that's coming out very shortly. And speaking of which, you know, ahead of the inflation data, I'm going to bring in the birthday boy, Steve. And Steve, once again, happy birthday.
Thank you, mate.
So for your birthday, I hear you're going to celebrate by doing analysis for everybody and covering the inflation data, CPI data with
Absolutely
with the group. That's awesome. That's very nice.
I couldn't have hoped for a better birthday present.
Well, I'm going to have to turn it over to you, but I want to say happy birthday. Thank you so much for being here on your birthday, and I know everybody in the community appreciates you.
Thank you, mate. We have quite a lot of US data during the next like 30 hours, right? We have CPI today, we have PPI tomorrow, and we obviously also have tomorrow the Fed. So I think it's going to be definitely. This is an interesting week. I mean, we have a lot of data coming in, a lot of central banks, and I do think that you know, volatility is about to you know, hit us big time. Now, at least in FX now, I don't know what's going to happen with stocks and indices. I actually have started doing some stuff since yesterday. Should I take the screen, Blake? Blake?
Yeah, you have it. I passed it over to you.
Yeah, go ahead, Ben.
Actually, I didn't get it, but I got it. You know, I just did it now. Okay, perfect. So thank you, Blake. Stelio, are you with us?
Happy birthday. Yeah, I'm here, man.
Thank you, mate. We have 2.1 year-on-year CPI expected today, 0.1 month-on-month. Am I right on that?
Core CPI, we're expecting 0.1 month-on-month, 2.2 year-on-year.
Okay.
2.2.
Okay.
Well, at least that's
2.2.
what my calendar has. Yeah.
Okay. Okay. And tomorrow we have PPI coming. Okay. Great.
Yes.
Now, yesterday, for those that were in the chat room, I went in like late European hours to say that I actually took 2.35% profit on my on half of my long S&P position at 2,785 point something it was.
Great
so I
trade,
closed.
man.
Yeah, it was a decent trade. I felt quite good about it, and you know I waited a little bit for confirmation. I think it was a decent trade, and actually,
You should always ring the register on your birthday.
Thank you. And in a sense,
That's the birthday out, man.
And in essence, today I also more or less hedged the rest of my position by establishing 1 quarter of a short position in the DAX from here and another quarter short the FTSE. The reason is I do think that both of them should produce one more leg to the downside. So I started shorting them today. I think that technically speaking, especially the FTSE, I like it very much. I mean, we had a strong move lower after a very nice evening star formation that we formed last week. And I do see that this price action, since we found a low, looks to me corrective. So I do think that that should produce one more leg to the downside to at least retest the 7,580 area, if not moving even lower from that to 7,450. So I sorted a little bit of both the DAX and the FTSE. As I said, FTSE looks somewhat better to me, and I know it doesn't seem very much related, but so far I'm also maintaining more or less the same view having to do with the USD yen. I do think that if the USD yen fails to penetrate through the previous high, this can be an ABC move to the upside. So I would ideally want it to see it fail, obviously below 111. If that's the case, I would expect another move towards 108 at the very minimum. But to be honest, I've abstained from trading the USD yen for some time now, and that isn't changing. You know, I'm monitoring it, but I'm not about to take a position here. I'm just seeing that it has equivalent characteristics. So I'm mentioning that I preferred to short the specific indexes instead. Obviously, we should also have a look at the Nikkei, because especially if that's the case with USD yen, we should also see another rejection from the 23,000 area in Blake.
I think he's off for a little bit.
No, he wasn't actually. I muted him. He unmuted himself by mistake. So if USD yen is to roll over from there, I would expect that the 23,000 area might actually produce another rejection. So in that case, we might see a move lower towards the 22,000 area once again. Otherwise, I think we were going to be testing the highs. Now, having said that, let me also show you a few pairs that we haven't seen in some time now. Let me first briefly say that I do view this as a consolidation in the Euro USD. You saw before Blake's 4-hour chart, he was viewing this in the Euro USD, this consolidation as a triangle. We all know that triangles tend to break in the direction of the previous move of the trend, which is higher in the short term. So I do still hold on to my long position. I do believe that another push higher might be coming, and you know, I feel fine by holding my long. By the way, let me pause this and let's have a look at the data, and then we can resume the analysis. So Stelio, we should have data any second now, right?
Yes, it's just CPI actually. I thought it was more, but it's just CPI.
Yeah, but CPI is quite important, especially.
Yeah, of course.
Let's see what we
get. There was a bit of a gold smash a couple of minutes ago, so could hint. And actually, yes, it's a little bit stronger. So CPI year on year is 2.8.
0.2.
Yeah, core CPI month-on-month 0.2. So slightly stronger. No, not massively, but it is slightly stronger.
Slightly, yes, slightly indeed. Okay, so do we actually have any real reaction from the USD? I don't really see something. 0.2 month on month. Let me read it here. CPI 2.8 year on year. Core 0.2, core yearly 2.2. Yeah, okay. Not bad data.
No, and no revisions either. I think the market's just going to wait now for the Fed.
Yeah, but regardless, I mean, the Fed was looking for roughly 2%. We are there, right? I mean, theoretically speaking, inflation is there. I mean, within their target, right, Stelio?
Yeah. Although their preferred measure is core PCE, so and that's a little bit lower. Actually, let me find out where that is. Hold on. Anyway, yeah, I'll find it. Yeah, inflation is roughly there. You're right. Yes.
Yeah, it is roughly there. And and if we also consider, other data like employment, etc., 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 I mean, we can understand why we are in a hiking cycle period, right? I mean, theoretically speaking, there is no reason having to do with the data we have in hand for monetary policy to be in extra loose conditions, right?
Yeah, I mean, you wouldn't call it extra loose conditions anymore because the US is ahead of everybody else. Also, core PC year on year, which is the number they look at most, and they've said this before, is at 1.8. So it's not exactly at target, but it's getting there. But the thing that would worry me a little bit if I was the Fed is that they've been hiking for a year and a half now, and slowly now we're going to start seeing the effects. So the economy is doing well, inflation is doing well, employment is doing great. But they still have to see how things go, and they don't want to overdo it. Again, also on the other side, they don't want to fall behind the curve. So it's a balancing act. I think they're doing okay so far, and I think the market, which is fully pricing this 2 days from now, the hike that's fully priced in, and it's pricing also 3 more until the end of 2019. I personally think that's relatively fair. Given the economy, given what's happening. So, it's a balancing act.
Given the fact that with every single rate hike that we get, we're getting closer to what should be, at least according to speculations, a neutral rate, because we know that rates should, at least not in this business cycle, will never return to whatever was considered normal under previous cycles, right? I mean, we see that during the last 3 business cycles, normal rates keep depreciating further and further. I mean, just think of where rates were, a couple of decades ago, and now we're considering if normal would be something like 3% or 3.5%, right? Which is still, with historical standards, quite low.
Yes, absolutely. And the way the global economies are going, and the way the global central banks are handling things, I think getting to 3.5%, 4%, that's going to be considered a good result, I think. And the new sort of the new normal in terms of rates is not going to be higher than that. I don't think. It's going to be very difficult to see.
At least not in this business cycle, and especially considering that many people don't realize the very, very simple concept that interest rates is the cost of money, right?
Yes.
But
yes.
Yeah, but at the same time, considering that it's also the cost of debt, I don't think, for example, the US economy can handle much, much more expensive debt when it's running with 1 trillion deficit per year. So,
and not only the US, more debt.
Oh, absolutely, not only the US. Yeah.
Globally, with the exception of a few, fortunate countries, is going to the moon. So you're absolutely right. It's the cost of debt, and you just cannot have that going, to double digits. It's going to be,
we can't afford it. It's as simple as that.
I don't know if you guys are old enough, but there used to be an old Wall Street adage that said three hikes and a stumble. So there used
but
to be a
we're
stumble.
so far still more than that.
That's what I mean.
Yeah.
Okay,
Yeah,
so
yeah.
so
Sooner rather than later, we see that.
yeah, so we're going to see our 7th today, right?
Yeah, but we need to consider here, and perhaps what plays a role, Dale, is the following:
All
is
the
that
QE beforehand.
one, that's one. Second is we had since the very beginning of Trump's election, and some of that was delivered, high expectations of fiscal stimulus. For example, we got tax cuts. There are also like promises of infrastructure spending, etc. And that does have probably an effect on slowing down the whatever results the hiking of rates might have to the economy. So perhaps these stall the effects of rate hikes. So in this case, that's why we might be headed to our 7th and still not having seen much of a negative effect. But yeah, sooner rather than later, the fact that monetary policy has reversed course, and everybody, it was a common acknowledgement, everybody was accepting that loose monetary policy, quantitative easing, zero interest rates were obviously helping the economy do better. So, nobody can refuse that the exact opposite direction in monetary policy, sooner rather than later, should have some kind of a hindering effect to the economy. Now, it remains to be seen if the economy will have enough momentum for that effect to be, rather small or larger than expected. I think we should find out, within the next year for sure.
Well, I think there's going to be at least a doubt coming into the most embraced market thesis out there. What do you think is the most embraced market thesis of all asset classes?
You mean stocks?
I mean any asset class. The bonds are in a bear market. That's the most embraced investment thesis. I don't find many bond bulls anywhere. Do you?
No, I agree
bonds
with you.
Are a good.
It's
you know what I mean?
It's very hard. Yeah, it's very hard to find somebody that that is advocating.
Because it's universally accepted that rates at bottom, they're heading up, and the bonds are in a bear market. But you take a look at some of the monthly charts. Take a look at your monthly bond charts, Steve, and tell me if you think this break off the top was impulsive.
This is a weekly chart, for example, of ZN, okay. Right? We've had
it could be an ABC.
It could be, although it's more complex. Yeah, but it can be. It can be an ABC. But to be honest, in the medium term, we still don't have any strong sign, any strong signal that we're headed higher from here. In the short term, if you remember, we've been advocating that perhaps this retest, let me go down to the daily, that perhaps retesting this broken wedge will produce one more leg to the upside, but that's like the short-term view. Now, having to do with the midterm view, I can tell you here the following. I have a very nice confluence of supports, which comes at the 61.8 of this leg higher, and exactly the same level is the projection of this leg lower from this recovery lower. So,
So we'd have to close over 123 to negate what people are calling head and shoulders breakdown or descending triangle breakdown. That would change the picture.
Roughly 123 is going to be a game changer. If we actually penetrate through 123 again, it's definitely a game changer. But we do have some distance from that. So I agree with you. Whenever you see everybody on the same side of the boat, you should start getting worried. There is no question about it. But on the other hand, we also have experience from markets that have extended for some time in the direction of what is well accepted that's going to happen before reversing course. So I agree with you. Definitely, the market's going to blow on many people's face if bonds actually start getting a very good bid from here. Now, I'm not sure if that's going to happen from here. I feel well enough that one more leg to the upside might unfold, but as long as we stay below, in the short term now, speaking again in the short term, as long as we stay below 122.50, I would be rather cautious, in the medium term, because I wouldn't really be surprised if we saw a move like this and then a resumption lower for at least one more leg to the downside, right?
Okay, well, its Siamese twin is U.S. dollar yen, so you have a similar outlook there.
Oh yeah,
It would be the reverse of what you're showing here.
yeah. I mean, Siamese twin. Yeah, more or less it is. More or less.
Yeah, they're joined at the hip right now.
Yeah. Very, very often they are. But we also see sometimes divergences due to other factors and reasons. But on average, yeah, they follow. I mean, yen is following, USD yen is following very closely rates. That's very true, and nobody can refute that.
And wouldn't
Now
you
going
expect
back,
some type of downdraft in the indexes if we get that next rally up in the bonds? I've noticed that within the indexes, Steve, the weak sister, which is an important group to lead, are the financials.
Absolutely.
They look like a descending triangle. They're not close to the highs in January. They look like if we have a correction, they could lead the market through the Fed lows.
Yeah. And usually the financials,
just some junk I see, man.
Usually the financials are also tanking when we see the curve flattening, right?
Yeah.
Yeah, and the curve flattening.
So that's my jigsaw puzzle.
Quite a good one, actually.
That's your birthday gift. I gave you.
Thank you very much.
A financial jigsaw puzzle. You and Jason could work on it.
All right. I think Jason needs a few more years under his belt to start doing that, but yeah, sure.
All right, buddy.
Now, I'm going to take us down to a 4-hour chart in the DXY to show here that my point of view, since we know that the dollar is going to be moving quite soon with everything that's coming, I think that there is a good chance that the next move is going to be lower as well. You can see it here. I think this is likely a pennant. So one more move lower towards 92.50, quite likely. So keep that in mind. Now, we said before, and this is the daily view. You can see we've had already 1, 2, 3, 4 daily candles that actually more or less point to a period of consolidation. But given the fact that we had already reversed course with this, big candlestick reversal that we had there, I do think that we should be seeing more downside. In which case, I would expect that the cable should resume higher from here towards the 136 area. Same thing with the Euro USD, might push higher at least one more time. At the very least, I would be looking for 118.50, but very likely we're going to be seeing higher prices like 119.20, 119.50, even 120 is not out of the question. Now, obviously, Aussie and Kiwi are looking still. I mean, from on the chart, they're still looking quite more bearish, simply because the Aussie USD is still within what looks like a bear flag, right? I think it's quite obvious here. This price action is definitely corrective, or at least it looks very corrective. Kiwi looks somewhat better, and I have to say that. I mean, for Kiwi, especially this recent 4 or 5 days of move, at least it tells me that it might want to break to the upside. So between the two of them, I said it last week as well, if I chose to be short one of them, it would definitely be the Aussie, which also tells me that if we look at the Aussie Kiwi, I think that the Aussie Kiwi has a decent chance of pushing lower at least once again, right? If not accelerating lower. So keep that in mind. Now, we had a question before, which I haven't addressed yet. We had several questions. Actually, one of them was, what do I think is going to be happening with gold? The answer is, I'm not really sure. That's why I'm not committed with gold at the moment, but I can tell you one thing for sure. This recent consolidation definitely doesn't look like a reversal to me. So, it looks more and more like a triangle, in which case I wouldn't be surprised if I saw it getting resolved to the downside, pushing towards perhaps the 78.6% fib of the last move higher, which is at 1265. At the very least, I would want to see a break above the 200 DMA to turn back in neutral in the short term. Until then, as I said, I don't know, it looks heavy to me. And if I had to have a position now, probably I would choose to be short. Silver, on the other hand, undeniably, although still trapped in the middle of a very long-term triangle, it definitely looks stronger during the past few weeks. So if you're determined to be long one of the two metals, you would have to go with silver in this case. If you wanted to be short, I would definitely be going with gold. Now, a fast look to the other metals. This is platinum. It's making an attempt to break higher, but I'm still not convinced from this descending wedge because I don't see any momentum yet. I mean, for me to get convinced, I would expect some kind of an acceleration happening sooner rather than later. And same deal with palladium. It's stuck in some kind of a range. It has broken above 1,000, but in all honesty, this price action, which is very slow and overlapping, doesn't make me feel that good about seeing it push higher from here. So I do think that it is likely that there's more downside left in this one as well. So the vast majority of the metals look either neutral or bearish, and this is something I cannot just forget. The only thing, as I said the other day, that looks good is copper, which has already broken to the upside, in which case I would be expecting that as long as it trades above 318, it might actually keep accelerating. So this is the metal that I would be more constructive on at the moment. Euros and euro pound questions. Sure, let's have a look at the euro crosses. Let's start with euro pound. We haven't had a look at it in some days, and not accidentally. I had even written in my analysis that this looks like a channel that was likely to break to the upside. But once again, I had said that as long as this is something that's happening within this 9-month slightly descending channel, I wouldn't be really getting enthusiastic with it. So yeah, it is breaking now higher from here. But in all honesty, I refrain from taking a position in the euro pound as long as it's trapped in this formation. The next area of resistance you should be looking for is 88.5 cents. A break higher from there will target this channel's resistance. Now, personally, I would still be favoring more an eventual break lower for one more leg to the downside from this channel before euro pound recovering further, right? But this is a thesis that I'm not going to be trading on, simply because I don't want to have to be trading something that is trapped for so long, and sometimes it does show that it's about to break out, and it never actually ends up confirming that. So I will stay on the sidelines until we see finally a breakout. Now, Euro-Aussie has recovered somewhat, but in all honesty, I'm viewing this as a corrective move. I would be expecting another move to the downside. Even if we push somewhat higher from here, I do think that there is at least one more leg missing to the downside. So even if we recover a little bit further from where we are towards 156, I would still be favoring at least one more push to the downside towards, my final target was at 152. I have taken profits to my short. That was a very, very nice trade I had last month. I'm not looking to be involved again. I might get involved being short once again if I see a very nice failure, but I'm definitely not looking to be long again. More or less, this is the same deal with the Euro Kiwi. Euro Kiwi, from a technical perspective, a little bit more mixed. Broke down from this ascending channel, but failed to produce follow through. Actually, held this horizontal support area. I would be looking for more downside here, but I think that the Euro Aussie has better technicals. So in any case, I would be looking to trade that. Now, obviously, I said before that Kiwi seems to be stronger than the Aussie, in which case somebody would be probably better shorting from that perspective Euro Kiwi than Euro Aussie. But sometimes, despite believing that the Aussie might end up being weaker than the Kiwi, in this case, I'd rather go with more clear technical picture. And I think between the two of them, the more clear technical picture is with the Euros. Okay. Now, having to do the pound crosses, here's the pound Aussie. I do think that this move is also corrective in the short term. So I do think one more leg lower might be due for this one as well. Now, is it going to be from here or from a little bit higher? In general, I would have to say that as long as we remain below 179.50, so even if we saw one more leg to the upside like this, right, as long as we remain below this zone here, I think that we should expect at least one more push lower before finally seeing some strength and perhaps a continuation of the bullish trend. I don't believe in general that these pairs can correct so soon the prior moves that they have already produced. Okay. It's
Steve,
not that I'm... Yes, Telio?
sorry to interrupt. Can you have a look at something for me, please?
Absolutely.
Can you have a look at the dollar Norway, which is my favorite? I'm short that one, and I think you are as well, aren't you?
No, I closed my position last week.
Okay.
I closed my position last week at break even. Actually, I had taken profits on my first half when I was short. Then I was out of the money, and when USD NOK hit my entry target, I closed the other half of my position at break even, and that's exactly the same thing I did with the USD ruble. I was long the USD ruble. I took profits on half my long. Then I was shortly out of the money, and then I booked the other half at break even. So I made profit on both those trades on half of my position, and the other half got stopped out at break even. Now, I think that the USD NOK value I think is rather mixed. On one hand, on positive news for people that are short is that we had some very nice RSI divergence on the daily, and we definitely didn't breach any major bullish levels, because in this case I'm viewing this, as you see, this formation, this descending intermittent trend line, which we didn't even test. So as long as we stay below there, at the very least we are within some kind of a prolonged consolidation lower. Now, on the other hand, I have to say that this rebound that actually almost reached 835 was a lot stronger than I expected. So I'm a little bit skeptical of what kind of move we're seeing here. So in essence, I don't see this as a clear cut technical formation. I would have loved it if it failed where I actually established my position here and then moved lower. Now I'm really uncertain of what's happening. That's why I prefer to close my position, the rest of my position at break even, although I would have been in the money now as well here. Now, I can tell you one thing for sure, 8 is definitely an important level. And if we do break below 8, I think we're headed back to 785, 786. But do I think that it's actually breaking down? Just look at this formation. Just look at it.
Yeah, no, fair point. But yeah, we've been talking about 8, nice round number. It's pretty big support. If that goes, then maybe it continues a little bit.
A lot of false starts. I'm not really convinced about this. Same situation, or it's not the same. It's not like extremely correlated, but it is decently correlated with USD SEK. USD SEK actually is finally breaking lower from this ascending trend line. Actually, Stelio, if you ask me, I think that USD SEK seems like a better trade, a better short trade than USD NOK at the moment. So if I had to be short one of them at the moment, probably I would select for it to be USD SEK. In any case, even if we see a rebound towards this area, I think being short is probably a good proposition. USD SEK got rejected from the 161.8% extension of this move lower. It was overextended by a lot. RSI divergence on the daily was more than clear. Finally breaking below a trend line. I think that USD SEC has better potential to the downside than USD NOK.
Okay. I mean, I actually like both Nordics. It's just that from a macro perspective, I prefer Norway, and
No, I
I've
understand.
said that many times in the past.
From a macro perspective, I agree with you as well. But you know very well, Stelio, that from a macro perspective, something might take a long time to actually play out, right?
Remember, yes.
Remember for how many years people were trying to pick a top at the Aussie USD, producing all the evidence that Aussie was extremely above parity, was extremely expensive, and it should have moved lower, etc., etc. And it finally, of course, ended up following fundamentals. So it broke down, and it broke down, in a very emphatic manner. But until that happened, I personally knew a lot of traders that have broken, that had blown up their accounts, trying to sort it too early. So I'm trying not to commit due to my thesis, which agrees with yours. I mean, I do believe that NOK should be stronger, especially against the dollar, than it currently is, and eventually it should strengthen against the dollar. But I'm not yet seeing clear evidence that that's going to happen from here.
Okay, thank you very much, Steve. Thank you.
My pleasure. We have a question now about USD. Let me have a look at it. Dale, if I remember right, we don't have an interview today, right?
No, we don't, but we have Mark Newton tomorrow, right in front of the Fed. CNBC contributor, Mark Newton.
Mark is very good. Yeah, I'm actually looking forward to hearing.
Not Fig Newtons, which are very good cookies, and they're good for you. And I know that you and I know that you Greeks like your figs, right?
Oh yeah.
Huh? They're good for you. They're delicious.
I love them. Absolutely love them.
Yeah, very healthy. So we'll have Mark Fig Newton tomorrow before the Fed, but nothing today.
Okay, no problem, mate. So when we finish up with the questions, we're going to call it. So
Okay.
USD next confluence of resistances at 1340. I do think that there is a high chance that USD is going to run out of fuel rather soon. The inverted head and shoulders formation was a very nice signal down here, and we did see a recovery coming from that. We hit the target, and we've actually gone further than I initially believed. But I do think that it should run out of fuel rather soon, and then I would expect to see what kind of a move lower we should have. I do think that on the way down, whenever we see a correction lower, 1270, 1275 is going to be an important level. If we do break below there, I do think that it's heading into two new lows. But until that happens, you have to respect that it's still recovering. I wouldn't be buying it though up here, for sure. I wouldn't be buying it, right? I would be more inclined to sell it towards there if we actually saw a nice reversal candle than the opposite. Okay, a question about crude. I think I said it yesterday as well. I think that crude is not done moving lower. I'm viewing this move. You can see how many we've already had 2, 4, 5, 6 with today's candle. 6 candles that 6 daily candles from which the crude has been recovering somewhat, but look at how slow and choppy this recovery has been. So I do think that this move higher from the recent lows is corrective. So I do believe that we're going to see another push to the downside once again. As long as we stay below 68, roughly, I would be looking for one more move lower towards the 63.75 area at the very minimum, if not lower, right? I mean, I wouldn't even be surprised if we ended up pushing towards the 58 to 59 area. I mean, that wouldn't be out of the question, especially considering that this whole move to the upside, has brought us from 26 to 72.5. General outlook on yen pairs. Listen, in the vast majority of the yen pairs, I'm looking for more downside. So, for example, let's have a very fast look. Euro yen. Here it is, euro yen. I do think that it should produce more downside now. From there likely, yeah, sure, from there likely. So one more leg to the downside, I would really be looking out for that. Pound yen. Pound yen looks even better to produce one more leg to the downside. I do think that we might push higher once again, perhaps to come retest this broken trend line. Let me extend it here, this broken trend line. But I would be expecting one more push to the downside, at the very least, one more push to the downside. Aussie, CAD yen, let me show CAD yen because I do think that CAD yen, technically speaking, is quite clean. We had, I think, an impulsive move lower. Now we saw a recovery, and now we've broken below this recovery. We're consolidating. I do think that one more leg to the downside from here is quite likely. Aussie yen, Kiwi yen, let me go through them very fast. Aussie yen, this is an ascending channel, perhaps a bear flag. We're still consolidating within it. I do think that it has a high chance of breaking the downside. Kiwi yen has been very, very heavy. I don't like the fact that produced a false break to the downside, but on the other hand, you can't actually look at this chart and say, oh, it looks bullish, right? I mean, at the very best case, it looks neutral, but I do think that it also has a high potential of breaking lower. Of course, if Aussie yen breaks lower, there's absolutely no chance Kiwi yen is also going to break lower. Here, though, as well, we can see what I was saying about the Aussie USD and the Kiwi and the NZD USD, that I think that Aussie looks better for more downside. So in any case, I wouldn't be shorting the Kiwi yen. I would opt to short the Aussie yen between the two of them. And as you saw before, there is a nice bear flag. So technically speaking, you have a very good indication of where you're right and where you're wrong in this potential trade, right? Okay, so okay, I'll cover this question about Nasdaq and then you can wrap it up. Nothing has changed in my outlook for the Nasdaq. I remain somewhat bullish in indices. I still maintain half of my long in the S&P. Now, the scenario we were monitoring for having to do with the Nasdaq when we were back there, what was it, 11th of May, is that perhaps this is an ascending wedge. In any case, I think, potentially more upside left here. If you see the IWM, I remember a friend like a week ago asked if I think it should be reversing lower, and I said, no, you have to respect that we got a very nice breakout from here. And as you see, this breakout has produced follow through. But I do think that there is a nice confluence you should be monitoring in the IWM. And it's this confluence up here, right? As you see up here, there it is. Yeah. The 161.8.
Like that.
And yeah, the 161.8 of this move lower and this ascending, long-term ascending channel, they meet at 171.8 roughly. So I would be very careful with IWM when we get there. Until there, I think that it looks good for more upside as well, right?
Yeah, nice look, Steve. Great job. And have a great birthday, my friend.
Thank you. So, we're always here. You can find us in the chat room if you're a ForexAnalytix member, and especially for days, for example, like tomorrow. Tomorrow we have PPI data as long as we're in the webinar, but then we have the Fed release, during, later hours. I mean, it's going to be evening here in Europe. It's going to be early afternoon in the US. So, you can't have live coverage 24/7 from a free webinar. So you would find us.
And we'll be live for the ECB. So the Fed, so we'll be here for the ECB. Steve, I've heard some rumors. Is it possible there are price increases coming for ForexAnalytix?
Yes, we will. I mean, we wanted. I mean, since Blake wanted us to make this company several years ago, and those that know Blake, they know how much he cares about the community. One of the first things he had he had asked is that we should have a very, very affordable pricing policy, because he was always in contact with the FX community, and he has helped a lot of traders get where they are today and succeed instead of failing. And that's why our prices are probably the most competitive in the market, despite us offering the most complete product out there. From a technological standpoint, I mean, we have mobile app application, we have tablet application, we have a good site, and now we're launching an amazing new version of the site. And we have a community.
Push alerts, a lot of signal, or
instead of being a one-man show, this is a company that more than 10 people are working to produce content for users. So yeah, we will have to hike our prices once we release this new platform, and we will still maintain a quite competitive pricing model, especially considering that we think that we offer the best product out there at the moment. But
so
yes,
everyone's already that's in is grandfathered in, and anyone who
they will keep the prices. Yeah, absolutely.
Grandfathered in too. So if you want to wait till the last minute, that's fine, but it's about to happen. Probably a few weeks. Thought I'd bring it up in case people were on the fence.
Yes, absolutely. Thank you, Dave.
Okay. All right, buddy. All right, everyone, we'll see you for Fed Day tomorrow. Try and prep you for it. Learn to react to the reaction instead of playing roulette. And enjoy the rest of your day. And be here for Mark Newton. Mark's one of the better technicians I know. And I can ask him about anything. I think the end of the in 2 weeks, Gwen. You're welcome, Jason. You're welcome, Bill. Remember, don't just count your pips, count your blessings. I'll see you guys tomorrow. Adios.